Hello, my name is Parmendra Sharma. I am the Program Director of Pacific Islands Center for Development Policy and Research. And we are about to have a conversation with Dr. Peter Dirou, who is the Adjunct Research Fellow with Griffith Asia Institute, visiting us this month. And we're going to talk about Peter's views on some of the things we are doing here in the center, as well as his insights on the region relating to the policies and other things. Dr. Peter Dirou, welcome to this conversation with PICDPR. As you know, it is geared towards developing capacity for policymaking and research in the Pacific region. And part of that program, what we are doing today, is to make our program more visible globally. That's why we are having this conversation, so that we can get some insights from yourself, who we see as an expert on the Pacific region, to take us through and talk a little bit more about your views on the region. So I would like to start by asking yourself to tell us a little bit about your background. I gather that you have been a consultant with ADB, and you have had a lot of interest in the region, in the Pacific. And you have worked with the region and for the region on several issues, especially the financial sector. So would you like to tell us something about that, please?
Sure. Well, firstly, thanks for having me. It's nice to be here at Griffith and also with your centre. Looking back on my experience, I feel I've been a bit mercenary. I've worked for just about all of those big agencies in the development business, from IMF to World Bank, IFC, the UN agencies, bilateral programs with the Australian government, New Zealand government, even the UK aid agency. And what's tended to happen is that I've moved around and across these agencies as my interests have changed, or there's a particular topic I wanted to get more immersed in. With respect to the Pacific, I've had three distinct phases. The first was in the late 80s to early 90s. Way back when I was at the Reserve Bank of New Zealand, what used to happen was I would be loaned out to the Ministry of Foreign Affairs to work on Pacific finance issues from time to time. Mostly it involved the Cook Islands at that point. Cook Islands has a special political relationship with New Zealand, of course. And I'd be working on anything to do with the finance sector issues in the Cooks. Offshore banking was a big issue. Anything to do with the public debt of the Cook Islands was a big issue for New Zealand, because they were guaranteeing that debt. And I also got involved with a very big macroeconomic study of the Cook Islands, which went over 18 months, in connection with how New Zealand was going to calibrate its aid program to the Cooks. So phase two was once I had launched out on my own as an independent consultant. That was, phase two in the Pacific was late 1990s, early 2000s. I was working a lot on financial sector programs, financial sector loan programs, financial sector reform work, including central banking reform across several Pacific countries. Samoa was the place I probably went to most often at that time, working for the big agencies, the multilateral banks, ADB in particular at that time. And the third phase, the most recent phase, was the most intensive phase. That went from early 2014 to early 2021, and that's when we got to know each other, and that was in my role in what was called the Pacific Private Sector Development Initiative. The acronym most people know it by is PSDI. It's a program funded by the Australian government and New Zealand government, managed by the ADB. And I think latterly the EU might have come on board and might be providing some financial support. So in that program, I led the finance stream. And as the name suggests, we were looking at ways of improving private participation in these economies, and finance is essential to increasing that contribution from private agencies. But it went in some interesting directions, and I found myself thinking very hard about things that I had taken for granted for quite some time, e.g. the role of particular financial institutions, what the bank was supposed to be doing or what the bank needed to be doing in the Pacific, how to think about long-term investment in finance in small countries. So intellectually, it was probably one of the most challenging jobs I've ever had. These problems are problems. Problems are there to be solved, but I found quite often that the toolkit didn't have what was needed to really start to be confident about fixing some of these problems in the Pacific, if I relied on that conventional toolkit. So for the last 3 or 4 years, I've been thinking quite hard about the peculiarities of the Pacific and ways of thinking that lend themselves to unlocking those problems in the Pacific, particularly the finance sector problems.
Well, thank you very much for that response. Very vast and rich. A lot of things, or some of the things I may not have been very well aware of, not too familiar with. Thank you very much for sharing that with us. And that also leads me to the next question I might have for you, which is, given that experience, that background, and after ADB, post-ADB, when you were looking to continuing to do some work in the region, be connected with the region, you reached out to Griffith Asia Institute, and particularly our center here, PICDPR, to see if you could find a role, to keep you going in the region. But you could easily have gone to some more established programs like that at ANU. I was just wondering then, what was it that attracted you to PICDPR?
Well, it's quite easy to answer. I'd of course seen the predecessor in action, the South Pacific Centre for Central Banking. So I knew, I had a reasonable feel for what was being done under that program. And the easy answer is that you have a real point of difference here, and that point of difference is the emphasis put on capacity building of those Pacific policy agencies, predominantly the finance agencies, ministries of finance, central banks. And I haven't seen that anywhere else, and it sits comfortably with my own personal interests. It's the way I like to spend my time. I like being around younger people. Keeps me thinking, introduces me to new ways of thinking, keeps me current. Probably the trigger, I'd been mulling this over for a little while. The trigger would have been the participation in the research conferences that you ran. So this is the pre-COVID days when we had the events in person. So I went to 2 of those, if you remember, one in Fiji and one in Vanuatu. And the first one I went to in Suva left a lasting impression on me. I didn't come away with that with the expecting. I came away with it feeling quite differently about what was possible, what might be possible. And what I observed was a group of younger people, largely new graduates or people that hadn't been out of university very long, who were doing some very, very good work, publishable work. And what further left its mark on me was the way these people presented that work. So this wasn't the stereotypical Pacific shyness on display. It wasn't the stereotypical discomfort at being in a large group of people and being up there in front of that large group of people. It was a confidence in what they had done and a confidence in being able to present that work. And all of those presentations were very polished. And I remember looking at the governors in the front row at one point during those presentations, and you could see they were having a similar reaction as well. These are our people. We've underestimated what our people can do. So that was a trigger. It was a very encouraging experience. And part B of that story is, I don't know whether you remember the details, but one of the presentations I did in Suva was titled From Research to Policy. So all the presentations up to that point had been on the research these people have been doing in the research departments of those banks. And I was, selfishly having a little bit of fun, and what I set out to do was see how far I could push these people. So, I've got a few more years on some of them. What you've done is terrific, but I know there's a lot more to be done, and you're going to find out there's a lot more to be done. So I was curious as to, how far they could be pushed, whether they were open to the challenges, whether they were open to thinking about other ways of conceptualizing these problems. So, we learn through our universities, through our textbooks, whoever we're exposed to, and the typical learning experience, and certainly for people in the Pacific, is the conventional mainstream theory. And my experience is that conventional mainstream theory doesn't play out that well in the Pacific. So what I was interested in, rather selfishly, was to see whether some of these people had started to come to that tentative conclusion based on the work they were doing. So in other words, these are the facts. This is the empirical work that's being done in the Pacific. This is what it's telling us. But it's not a very good fit with a lot of what we've been taught or the theories that we're supposed to be working to. And that's the role that I decided that I could contribute to through PICDPR.
You have shared your views with myself on how you see the center and its role in the region and some of the good work it has been doing, but not at length. And I'm so pleased to know that you really have some regard, high regard, and you value the center, the work it is doing. So thank you very much for that. I'm going to come back to this question a bit later, but before our leading question to this a bit later. But before that, I would like to know from you, and given your background with ADB and in the region as well, in the financial sector particularly, and this question, that you could respond to it in terms of the financial sector only or the broader issues relating to the Pacific. What I would like to know from you is what do you see as the, let's say, 3 key policy challenges for the region in the, say, short or medium term, not the long term, or maybe also the long term, but mostly in the short or medium term, please?
Sure. It's a biggie. I'll stick to finance, if I may. That's what I've been thinking about most over the last few years. The qualifier being that finance doesn't have a life of its own. Finance exists, it plays a role to support the real economy in some way, and a lot of the financial problems we have had, through history, have been when those two, finance and the real economy, become disconnected in some way. And I find it a good discipline to work to make sure I'm coming back to that connection in whatever I'm doing. Don't get too carried away with the intricacies of the finance or the technicalities of it. It's serving a purpose. There's a job or jobs that finance have to do. So if there's 3 big issues in the Pacific, well, the first one has to be something to do with climate change, of course. If climate change or dealing with climate change is the imperative facing the Pacific, and that's what the Pacific leaders are telling us, well, we have to do something about it. And in the finance world, we have to come up with finance solutions. And by finance solutions, I'm talking about using the techniques of finance, the instruments of finance to do particular jobs. So just about everything to do with finance is about an assessment of some type of risk and the management of that risk. So you put in place the financial instrument to do it. You'll need some savers and borrowers. You'll need some investors and those that are engaged in the capital formation, for example. So what I've been trying to do in my own thinking is keep this risk-taking role and financing of risk central to all the work I'm doing. So with respect to disaster risk financing, we'll call it, what has struck me is how little money is at risk in the way finance solutions have been designed. So yes, there's a lot of debt money. Yes, there's a lot of grant money. Some of the debt might be concessional, but it's still debt. And this is, this concern with debt is something that the Pacific Islands Forum has picked up on, and the leaders have been at pains to point out the need for the new Pacific Resilience Facility that they are promoting. One of the reasons being that there is too much debt finance out there already, and too much of that component is geared to the post-disaster financing activity, as opposed to resilience financing, we'll call it. Now that's all very understandable, well-intentioned, but what if you were talking about this in a conventional finance way, because it's such a risky endeavour, you're looking for risk capital to be in this game. So point number one is that there's not enough attention being directed to the design of those risk financing instruments for the Pacific. There are techniques in finance, catastrophe bonds being one of those, index-linked securities more generally. We've had one try in the Pacific, serious try through the PICDPR scheme, which was a World Bank initiative with some donor participation. It hasn't been very successful at all, and the World Bank's reviewing it at the moment. Only 5 countries still participating, insurance-based, and it just hasn't captured the imagination, rightly or wrongly. And one of the reasons being, the sums of money we're talking about here are too small relative to the scale of the problem. Well, there's other types of finance where capital is at risk that are better suited to taking on that risk. And then when it comes to debt, I find the use of debt, I find the discussion a little bit confusing as well. So everyone understands why there might be problems with debt servicing. But one part of this discussion that I don't think is getting sufficient airtime is that you can, if the economic return on that debt far outweighs the cost of the debt, you've got prima facie a good case for entering into that debt. And given what we're being told, that the payoff from substantial infrastructure investments or anything to do with adaptation, it's substantive. Again, prima facie, it suggests a very high economic return from incurring that expenditure. Debt finance maybe. So my point here simply is that if we strip this back to the type of risk that you're dealing with, and then reach into the toolkit for the appropriate finance solution, we'll probably end up in a better place. But at the end of the day, if we're talking risk finance, someone has to step up. And what I'm going to be promoting more of in the months to follow is that the bigger governments in the region have most definitely a role to play in taking on some of that risk and building these markets. We have to ask ourselves, why do these markets exist in other parts of the world and not in the Pacific? So that's, there's answers to that, but unlocking those answers should lead us to a place where we're able to use these risk financing techniques more appropriately. So that's climate. Number 2 would be, I think this is a bit of a catch-all, but anything to do with banking. So this plays out in several ways. Some people might talk about it as an access to credit problem. Right? So the structural problem is that the institutions that we rely on in our finance sector to provide credit aren't providing this credit in the way that's desired, the way that is needed in the Pacific. And there's various reasons for that. If you strip it back to this risk-taking dimension, it helps understand what's been happening in the Pacific. So, simply put, there's been a reluctance or an unwillingness to take on particular classes of risk. It's not that a particular activity is excessively risky. It's just that the person with the entity with the big pockets doesn't really feel equipped to be entering into that business. It doesn't have the skill sets to make those credit assessments, to manage the risk associated with it. It doesn't have the balance sheet that's needed to support some higher level of risk taking. So again, what I'm at pains to do here, or trying to do, is reduce this story to one of finance. If we're talking finance, we have to do ourselves a favour by using the language of finance. And that language is there, it suits the purpose of the discussion, it helps us focus on the job we want finance to do and the way we're going to go about doing it. So this banking problem, or it's an ill fit between those credit institutions we have in the Pacific and the type of risks that need to be financed. So that can be SMEs, we could think of it in terms of the need for more financing for agriculture. Can be anything. There'll be a risk segment there that in all probability is not being served particularly well. And you could bundle into this sort of banking problem category anything to do with the correspondent banking relationships. That's a well-known problem through the Pacific. It seems to be getting worse. The solution so far isn't there. I suspect it's not too far away if we start reaching into some of the fintech solutions that are around. But right now, it's a problem that's worrying a lot of people. And quite clearly, if these correspondent banking relationships aren't there or are imperiled, this has serious implications for Pacific economies. Now, the third part of this, financing problem that I think is a major problem, something that doesn't get a lot of airtime, is anything to do with longer-term investment finance. So the way to think about this is, it's capital markets financing, but on a small scale. So how do we get this investment finance in the Pacific in the absence of stock exchanges? So Pacific has two stock exchanges, one in Fiji, one in PNG. Between them, I forget the exact number, there's just over 40 listings. All right? So again, intentions are all in the right place, but the fit between what those institutions, those equity exchanges can do and what needs to be done is not at all good. So, to generalise, if the predominant business form is a small business needs much more than bank credit to get through life and to be able to grow, right? It might be lucky enough to get some working capital finance from the bank, but in all probability it won't have any luck getting money for expansion. Even much bigger businesses struggle to get their investment financing needs met by the established institutions. This is not good, right? So problem is that the finance sector, more generally, is not meeting the financing needs of those businesses in the Pacific. This link between finance and the real economy just doesn't exist. It's not that it hasn't been broken, it's more that it hasn't been created to be broken. So to me that's a really big problem, and by talking too much about banks and credit, we lose sight of other forms of finance that are badly needed in the Pacific. So what brings these three areas together is that they're linked to the real economy. You're building this bridge between finance and the real economy. You're thinking about different classes of risk at any point, right? So the risk for what the bank is extending credit on, it would be low, considerably lower than the equity finance that is needed for business expansion, for example. Considerably lower again than this climate change risk that we talked about earlier. So the general point here is that, and this is what the big issue for me in finance is that the financial architecture we have in the Pacific is not fit for purpose. The exercise that I've embarked on is to do some serious thinking about what that architecture should look like.
I can see several conversation type articles coming out of this in terms of making Australia and the readers here aware of the concerns you might have, and these are real concerns for the region. I can see. I can also see some policy papers being developed from all of this as well, and also yourself making a presentation to senior management in the region. So, and also further discussions on your thoughts on each one of those policy areas that you talked about. So we can be talking about this for a long time, but we need to wrap up this conversation. So I'll come to the last question that I have for you, and this is related to a question that I asked earlier about PICDPR. Why were you attracted to that? Now, having outlined these issues, these policy issues, challenges for the region, very quickly, how do you see PICDPR playing a role in all of these things in terms of building capacity for policy or for research, please?
Quite simply, it's building this link between research and policy. So to keep those people going that you've been working with, take them to the next stage, help them work through the policy implications of the work they've been doing. So if there's work done on what's happening in the finance sector, work through what needs to happen in terms of a financial sector development plan. What are the implications? What does this particular country need in terms of financing structures? So that's the obvious thing. So it's an extension of the capacity building work that you've been doing. And my objective would be, or what I would like to see happen, is for a governor of a central bank, minister of finance, CEO of Ministry of Finance, at any point to be able to go in-house and direct somebody to do the piece of work that's needed. Here we have a problem that's worrying our government. We need some serious research on this. We need a good piece of analysis on our policy options. And I would like to be able to equip people, these younger people that we were talking about earlier, to be able to do that job, have the confidence to do that job. It's difficult when you're in a small organisation, in a small country. You've lost your networks that you built up at university. What you're doing through PICDPR is a way of re-engaging those people and building scale around that policy-making capability.
Thank you very much for that, Peter. Thank you very much for your time, your insights, your views. They are, of course, very useful, very valuable for the region, of course, as I've been saying. But we're going to conclude the conversation here now. I look forward to talking to you again at some time in the future about these issues in more detail. In the meantime, I hope you have had a good time here at the Griffith Asia Institute this month and working closely with us and GAI. Thank you very much for your time, Peter.